Hi, I'm David Bodamer, Editorial Director of National Real Estate Investor here in Atlanta at the MBA Commercial Real Estate Finance Conference. I'm here to speak with Brian Stoffers, President of Debt and Equity with CBRE Capital Markets. So what are you seeing so far at the show?
Yeah, there's a lot of optimism at the show. I'd call it cautious optimism. But I think by and large, the lenders we've met with so far, whether they be CMBS, life insurance company, or some of the major banks and credit companies, have all indicated a real interest in putting out more money this year.
And so how do you think they're going to get to that goal? Are we going to see a broadening at all in the types of properties or projects that are being financed or markets or any of that kind of thing?
I think a little bit of both. The conduits have been very direct in saying that they understand where their market is going to come from this year, and a lot of that's going to come from the secondary and tertiary cities.
Okay.
Perhaps dipping into some of the B and C quality property and getting paid for that. Life insurance companies, I think, in some cases have indicated a willingness to go into the mezz space, so a little higher on the loan-to-value scale. And the banks, those with healthy balance sheets, are looking to put out more money at, obviously a very low cost of funds on their part. So I think, broadly speaking, it looks good.
And what are the goals for your group this year?
We plan on doing more than we did last year. Last year was a very good year for us. And we plan on doing more as well. We're a publicly traded company, so obviously I can't be too specific there.
Right.
But both in our sales practice and our debt and equity finance practice, we see more. I will say that we had a very large increase between 2010 and 2011. And we see that somewhat tapering this year. And obviously there's a lot of geopolitical things happening around the world that can influence markets one way or the other. So we're watching that closely as well.
And so what is the biggest concern to you in terms of looking at some of these potential red flags?
Well, the biggest red flag, I think, is just the uncertainty of what could happen in the Eurozone.
Sure, okay.
There's also some negative talk right now in the Middle East. And certainly those things can move markets in a big way. And I think we need to be cautious of that.
Right, so you're just kind of keeping aware of that, but right now not expecting that to be a big...
I don't think anybody's building that into the plan, although there's contingencies around that potential. And we saw it last August when spreads in CMBS widened dramatically, which took out a big sector of the lending market.
Right. And overall, though, like you're saying, each of the sectors, CMBS, life insurance, they're all kind of back on track at this point, though.
I would say so. Nobody's forecasting a 2007 kind of year.
Right.
Of lending. We're not going to have the sale activity that would justify that kind of lending either.
And is there any kind of difference in the outlook among property types? I know multifamily's certainly been the preferred for several years, and it seems like that's still going to be the leader, but what about some of the other ones?
Well, multifamily will continue to be the belle of the ball. The agencies are helping along those lines. But I would say that needs-based retail is still very, very attractive, and a lot of lenders at the conference have talked about that. Office, I think we're seeing some lenders move into some of the suburban markets for office lending, which I think is a good sign, and the condos are certainly willing to do that. Industrial, broadly speaking, is an attractive asset class, and we're even talking about a lot of hotel financing at the conference.
Okay, great. Well, I want to thank you for spending some time with us.
My pleasure.
And stay tuned for other videos in our reporting from Atlanta.